Watch her exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Hello and welcome. We're here at the JPMorgan India Investors Summit, and joining me right now I have James Sullivan. He's the head of Asia ex-Japan equity research. James, thanks very much for taking out the time and joining me.
Good morning.
While obviously we've gotten a sense of what the mood is like in India, but from a foreign investor point of view, when they look at India at this point, when you're having the conference, is the mood subdued?
So I would say a couple different things. First off, if I look at investor participation, we're still seeing growing numbers of investors. If I look at corporate participation, we have over half the market cap of corporate India present and attending the conference, meeting with those international investors over the course of the next couple of days. So I think investor interest remains very high. I think what investors are trying to ascertain is what is the right storyline to think about, what is the right narrative at play here in India within the context of global emerging markets.
What do you think the narrative is?
So I think it's shifting. One of the most interesting aspects of conversations that we've had with clients over the course of the last couple of weeks is the fact that you look at the global realignment that we see across the globe. We look at the move to a multipolar global environment that has impacts in terms of global trade flows. It has impacts in terms of global supply chains, particularly as it regards to China. The most interesting aspect of that for me is that most investors think global supply chain realignment and think of ASEAN or Vietnam. They don't immediately think of India, which I think is a mistake. The ASEAN markets are beneficiaries, but they're too small to take the incremental FDI flows that China is potentially starting to push off into the rest of the region. India is extremely well placed from that perspective for a variety of reasons. Number one, the fact that politically it has generally had a non-alignment policy historically. Number two, the scale and size of the economy. And you're starting to see that play out in a nascent way. If you look at the financial year that just ended in March of 2019, India saw the largest FDI inflow ever in the history of the country. So that narrative is starting to catch on, but we don't see investors necessarily fully understanding or fully buying into that narrative yet.
Since you spoke about FDI, there were a lot of recent announcements made by the government to open up FDI in specific sectors. Do you see India, making it as a part of the manufacturing supply chain, the global manufacturing supply chain, having a big, strong position there?
I think the government is taking some absolute critical steps from a broader public policy perspective to enable that outcome. And I'd point to a couple in particular. Number one, the implementation of GST, as we've discussed previously, is absolutely critical. You're effectively creating an organization larger than the EU. And that's not really the way that it's been perceived, but it's incredibly important in terms of the overall efficiency of the Indian economy. And we see that as really one of the key implementation steps that's required to walk down that road. The other is the investment in infrastructure, which the government is aggressively pursuing right now, which we think is the right public policy stance. And so we see very good incremental public policy decisions coming out of the Indian government. We see a regional and global geopolitical environment that is absolutely setting up a scenario whereby India could stand out relative to the rest of Asian economies, which is important because if the backdrop to this conversation is structurally slowing global growth, as trade flows slow, as we create a less efficient global economy because of supply chain reorganization, supply chain replication, quite frankly, if global growth stalls and India has a country-specific growth driver that most countries will not have access to, that allows the country to stand out in a very significant way.
So from the emerging market basket, where does India stack in terms of, the pecking order?
Sure. So there's two critical aspects that we're looking at within Asia equity strategy right now on the positive side of the ledger, one of which is significant domestic demand driving domestic consumption, because we don't necessarily want to be exposed to the export-oriented economies of Korea and Taiwan as we reorient these supply chains, because there will be a period of disruption and a period of margin compression as you replicate and rebuild supply chain elements in different countries around the region. India stands out in that basket. Indonesia stands out in that basket. Thailand doesn't look too bad from that perspective. The other step that we would like to see, again, are positive, proactive steps being taken by the government of the country involved to enable that next stage of growth, to enable, where possible, differentiated growth Because if the argument is that the average is going to fall, then it's really that differentiation approach that we really need to take advantage of. India presents a lot of very interesting opportunities in that conversation.
Will that take some time, though, to materialize in terms of the outlook for India, and therefore the confidence, and therefore the investment into the country, versus a country like China, even though it's in the middle of the trade wars, it's still getting the highest FII money?
So growth in China has held up relatively well, which is an important part of the backdrop. If the precondition for emerging market outperformance is faster relative growth relative to developed markets, China has continued to fulfill that. The growth slowdown that we've seen here in India, just as an example, we just posted the second consecutive quarter of sub 6% GDP growth. It's the first time that's happened in over 7 years. And that's a part of the conversation as well. And so China has implemented very, very significant incremental policy steps, both on the fiscal and monetary side, to continue to shore up growth. We're seeing the Indian government step in and do very similar measures at this stage, which we see as an incremental positive. But as you say, very rightly say, it will take time. And so at the moment, we're still forecasting a relatively stable period for the Indian index, partially because valuations are not depressed at this stage. They're still sitting right about 5-10-year averages, combined with the fact that a lot of these structural changes will take time to play out in the broader macro economy. And so the medium-term outlook is significantly more positive than the short-term outlook from our perspective. Okay, what do you see as a bigger threat to India right now, and even emerging markets? U.S. equity markets have not seen a down cycle in the last decade. If that starts to turn and that gets questioned, do you feel a bigger, more amplified impact on India? Or, considering we've already seen a come off from our highs, maybe we'll just about adjust? Yeah. It's a great question, and there's two ways of looking at it. So from a JPMorgan perspective, our odds of a U.S. recession have risen from 25% to about 45% based upon our analysis right now. And so the risks are clearly increasing and continuing to build in the broader system. Looking at relative out or underperformance in a U.S. recession environment, I think you've hit on exactly the right points. What we're trying to see here are countries that have already underperformed. What we're trying to see here are countries that are not inextricably linked to the risk factors. The biggest risk factor that we see isn't necessarily trade. The biggest risk factor that we see is confidence. And the way that that plays out is business capex. And if I look at business PMIs right now, they're sitting at the lowest levels that they've been in a long time. If I look at the missing element of global economic growth right now, it's really the capex cycle, which has been held back for the last 5 years. India is not necessarily as exposed to that global capex cycle as markets like Korea, Taiwan, China, and has the potential to relatively outperform in that type of an environment, particularly if the government continues to do what they're doing, which is step in positive, proactive public policy steps to drive that differentiated growth. How big an impact are you viewing the current situation with Saudi Arabia? I mean, while they're saying they're going to get everything back on track by the end of the month, the near-term shocks, how big can they be? So we see it as a near-term shock. If I look at, so oil is always a supply-demand conversation. On the incremental supply side, we see incremental supply coming out of Russia. We see incremental supply coming out of other markets in the Middle East. And critical to the supply conversation is the new oil field that's coming on stream in Argentina, in Patagonia. And so on the supply side, we do see offsetting supply that can help that side of the equation. On the demand side, again, our outlook for global growth is challenged. Our outlook for global growth is challenged by the fact that this global realignment of how the world works, at least in the short term, results in a less efficient global economy, so potential economic growth falls as well. So if I have potentially reduced demand, relatively benign environment on the supply side, we see a neutral outlook for oil going forward. We don't see this as a sustainable shock to the system. Okay, so that will balance itself out and probably normalize. That's the expectation. Okay. Currency markets, emerging market currencies, a bit turbulent? Turbulent, but the backdrop to currencies is always driven by a combination of rates and inflation expectations. Different stories on both sides of that equation. On the rate side, we now expect, we now expect 3 insurance rate cuts in every single incremental meeting of the U.S. Fed between now and year end. That creates an environment where EM central banks now have significantly greater flexibility, significantly more runway to work with to loosen monetary conditions across most EM markets. And that's what we're seeing right now, inclusive of here in India. That effectively starts to shore up consumption spending across EM in a very positive way. The inflation side is extremely interesting. In most markets, we're now talking about the risk of what at JPMorgan we're calling the Japanification of the global economy. Low growth, negative inflation, which creates a very interesting environment for investment decision making. We don't necessarily see that at play in markets like India. Inflation's been relatively stable at a relatively moderate level, slightly below the central bank target. That's a significant positive that we don't have in most markets, where inflation continues to undershoot in very meaningful ways, inclusive of the US. So the inflation outlook across many emerging markets, inclusive of India, is actually relatively benign. And the central banks across most of these markets are getting a lot more runway because of the incremental cuts that we're expecting out of the US Fed.
All right. If you were to leave me with one headline, one thing to watch out for from a medium-term perspective, be it global, be it India specific, what would it be?
Let's focus on India specific. And I think that the most important thing for investors to focus on from here, from a JPMorgan perspective, is understanding the conversation that we're having. Does the definition of India start to structurally change if we start to have this supply chain realignment and India as a core part of that conversation? Investors will look at India differently. Sector outperformance and underperformance will start to structurally shift. And in that type of an environment, if the government is successful in driving that type of a narrative shift, India has the potential for significant medium-term outperformance because it will have that structural driver of growth that most emerging markets will not have access to, given the size, scale, and structure of this economy. So I think that the medium term, there's some very, very positive stories to tell. There's still works in progress, and we still need to see incremental steps from here. But I think that there's ways of identifying extremely interesting narratives for this market going forward.
I feel a lot more confident about India after speaking to you. James, thanks very much for joining us. Appreciate it.